Hey everyone, and welcome to this deep dive into the October 2024 tax updates. We're going to cut through all the noise and give you the info you really need to know for filing in 2025.
Think of it as a cheat sheet to help you stay ahead of the game.
And trust me, this is more than just boring regulations. We've got some genuinely interesting changes coming that might even put some money back in your pocket.
Let's start with the standard deduction increases for 2025. We're looking at a pretty significant bump.
Yeah, that's right. For single filers and those married filing separately, it's going up to $15,000. That's $400 more than last year. And for couples filing jointly, it's even better. An $800 boost to $30,000. And heads of household get a $600 increase to $22,600. Wow, those are some big numbers. I know we have some listeners who are really good with numbers. Can you break it down for us? What does this actually mean for someone's bottom line?
Well, think of it this way. A higher standard deduction means a lower taxable income. So depending on your individual situation, this could mean a smaller tax bill or even a bigger refund. This is something to keep in mind when you're thinking about withholding throughout the year. You don't want to be overpaying.
Right, that makes sense.
Oh.
Now, while we're on the topic of adjustments, I saw some other interesting changes related to inflation. The foreign earned income exclusion really caught my eye. It's up to $130,000 now. That's a pretty substantial increase. What's the reason for that?
That one is particularly helpful for anyone living and working abroad. Basically, it means you can exclude a larger portion of your foreign earnings from U.S. taxes. So if you're an expat, this could potentially save you a good amount of money.
That's like a bonus for being adventurous enough to work overseas.
Exactly. And speaking of bonuses, let's talk about a couple of changes that might be more relevant for those with higher net worth. The estate tax exclusion has gone up to $13,990,000.
Wow, that's a number that makes you think.
Yeah, it does. This basically dictates how much of an estate can be passed down without being hit with federal estate tax. It's definitely a key number for people in wealth management to be aware of.
Right, it could have a major impact on estate planning strategies.
Absolutely. And then there's the gift tax exclusion, which is now up to $19,000 per recipient. So if you're feeling generous, you can spread the wealth around a bit more freely this year.
So anyone who's planning on giving some really nice gifts, now's the time. Now, shifting gears a little bit, another change that jumped out at me was the Social Security wage base increase. It's going up to $176,100 from $168,600. What does that mean for, well, anyone who earns that kind of money?
This is where things get interesting. So higher earners are going to be paying more into Social Security. But on the plus side, this could mean higher benefits later on when they retire. It's a bit of a trade-off.
A balancing act for those in that income bracket. Okay, so we've covered these inflation adjustments, but there's another big development on the horizon that we need to discuss. The possible expiration of parts of the Tax Cuts and Jobs Act, the TCJA, at the end of 2025.
Right. This is something we need to watch closely, because if Congress doesn't extend certain provisions, we could see a major shift in the tax landscape as we know it.
So the clock is ticking. What are some specific areas we might see changes in if those provisions expired? I'm getting a cliffhanger feeling here as we head into part 2.
You got that right. We have a lot more to unpack. Stay tuned.
All right, so we're back, and we're ready to get even deeper into these 2024 tax updates. Before the break, we were talking about how parts of the TCJA might expire. Sounds like it could have some pretty big consequences. Where should we begin?
Well, one of the biggest things to watch is individual income tax rates. The TCJA lowered those rates across the board, but unless Congress steps in, they're set to go back to pre-TCJA levels after 2025.
So potentially higher tax bills for a lot of people. That's something to be aware of for sure.
Definitely. And then there's the itemized deduction for state and local taxes, or SALT. The TCJA capped that deduction at $10,000, which really impacted taxpayers in high-tax states.
Yeah, I remember that being a big issue.
It was. And that cap is also set to expire, meaning the deduction could become unlimited again. But as with everything else related to the TCJA, we'll just have to wait and see what Congress does.
So much uncertainty. Any other potential TCJA expirations we should be thinking about?
One more that's worth mentioning is the change to the child tax credit. The TCJA made the credit bigger and made part of it refundable, but those changes are only temporary.
I know that credit really helps families out, so I'm sure they'll want to know if it might expire.
Absolutely. It can make a big difference in the cost of raising kids.
Okay, so it sounds like we'll need to pay close attention to what happens in politics over the next year to see how this all plays out. Let's switch gears for a second and talk about something a little more concrete. PTIN renewal. We mentioned it briefly before, but what are the absolute must-knows for tax professionals?
The deadline is December 31st, no exceptions. The fee is $19.75. And you can renew online on the IRS website. And of course, you'll need to have that written data security plan ready.
Right? The data security plan. I think some people might feel a little overwhelmed by that, especially those who aren't so tech savvy.
I get that. But at the end of the day, a data security plan is just about outlining how you're protecting your client's information. It doesn't have to be super complicated. The IRS website has resources and guidance, and there are tons of templates and examples online.
So it's more about having a plan in place, not about becoming a cybersecurity expert overnight.
Exactly. It's about being proactive and showing that you take data security seriously. And to be honest, it's just good practice for any business, whether you're a tax professional or not.
Good advice for everyone. Now, I want to go back to something we talked about before, the Social Security wage base increase. We discussed how it affects higher earners. But what does this change mean in the bigger picture?
Well, what's interesting here is that this increase shows how people are thinking about the long-term future of Social Security.
Ah, yes, the never-ending Social Security debate.
Right. By raising the wage base, the government brings in more money to keep the program running. But it also highlights that Social Security is a pay-as-you-go system. Basically, today's workers are paying for the benefits of today's retirees.
So as baby boomers continue to retire and people are living longer, it puts more and more pressure on the system.
Exactly. And that brings up some big questions about the future of Social Security and how we can make sure it's still around for future generations. Those aren't easy questions to answer.
Definitely some big picture issues there. Okay, so we've covered inflation adjustments, the potential expiration of parts of the TCJA, PTIN Renewal Data Security, and even the future of Social Security. I'm sensing a theme here.
Oh, yeah. What's that?
Change. It feels like everything's up in the air. And staying informed is more important now than ever.
You're absolutely right. It's a fast-changing world, and tax laws are no exception. Being proactive, finding good information, and adapting to changes are key to managing your finances successfully.
And speaking of adapting to change, we have one more important topic to discuss before we wrap up this deep dive. Let's take a quick break, and then we'll be back to talk about what all this means for you and your personal tax planning. All right, we're back for the last part of our deep dive into the October 2024 tax updates. We've covered a ton of information from those standard deduction increases to the potential expiration of parts of the TCJA and even the future of Social Security. But let's bring it all together. What does this all mean for you, the listener, and your own personal tax planning?
That's the big question, isn't it? And it's one that really depends on your individual circumstances.
Right, because everyone's financial situation is different.
Exactly. But there are some key things that everyone should be thinking about as we head into the 2025 tax year.
Let's hear them. Where should our listeners start?
First things first, take another look at those inflation adjustments we discussed earlier. See how the changes to things like the standard deductions, the foreign earned income exclusion, the estate tax exclusion, and the gift tax exclusion might affect you personally. Maybe there are some chances for you to save some money or change up your financial strategies.
That's a great place to begin. It's like knowing the rules of the game so you can play it smart.
Exactly. And while we're talking about strategy, don't forget about the possibility of those parts of the TCJA expiring. This is where it gets a little tricky since we don't know for sure what Congress will do, but it's important to stay up to date on any news about that, especially as we get closer to the end of 2025. If certain parts do expire, it could have a big impact on how much you owe in taxes.
So it's kind of like having a plan A and a plan B in case things change unexpectedly.
I like that way of putting it. And don't forget, MY CPE is a great resource for staying informed about all the newest tax information and analysis.
True. Now, for any tax pros out there listening, remember that PTIN renewal deadline, December 31st, is right around the corner.
That's right. Make sure to renew on time so you don't get hit with penalties or have any interruptions in your practice. And of course, a solid data security plan is essential, not just for PTIN renewal, but to keep your business and your clients' information safe overall.
It's about having peace of mind.
You got it. Now, as we wrap up this deep dive, I want to leave our listeners with a final thought. We've talked a lot about change and how unpredictable the tax world can be. But one thing that always holds true is the importance of planning ahead when it comes to your finances.
I agree completely. Knowing what's going on is key, especially with your money.
For sure. So as you think about all the information we've covered today, ask yourself this. What's one thing you can do right now to improve your tax situation for next year? Maybe it's taking a look at your withholding, changing your investment plan, or just learning more about these upcoming changes. Whatever it is, take that first step and get yourself on track.
That's a great call to action. And remember, listener, you're not in this alone. There are resources out there to help you understand these complicated issues and make smart decisions about your financial future. Thanks for joining us for this deep dive into the October 2024 tax updates. We hope you found it helpful and empowering. Until next time, stay curious, stay informed, and stay ahead of the game.